We're live from Lagos, Nigeria's commercial capital. This is Business Nigeria. Thank you so much for joining us wherever you're watching from around the world. Let's bring you up to speed with some of the highlights we have for you today. Nigeria's crude oil production quota drops in the month of August. Plus on the program, the Central Bank of Nigeria orders, Nigeria also orders the sale of bulk payment. And of course, we also have outside Nigeria, Asian shares rise on easing dollar, China stimulus hopes. On the interview segment on the show this afternoon, first we'll look at issues around the adoption of cryptocurrency here in Nigeria amid ban by the central bank. And of course, on the other side of the show as well, we'll also be looking at the performance of the Nigerian capital market amid global economic headwinds. Welcome to Business Nigeria. Let's bring you up to speed with some of the trending stories making headlines. At this time, Nigeria's oil sector challenges appear to be worsening, with production hitting a record low of 972,394 barrels per day in the month of August. That's according to the latest report from the Nigerian Upstream Petroleum Regulatory Commission. The development marked a new record low in the over a year-long downward spiral in Nigeria's capacity to drill enough oil to boost its desperately needed foreign exchange. Even at the time, the commodity has continued to hover around a rarely seen price of $100. Available information shows that Nigeria last produced that low quantity of oil in 1983, roughly 40 years ago, when 675,000 barrels were drilled on the average, a decrease below the 1 million barrels per day mark in production in August. Despite months of assurances of planned improvement by the Nigerian authorities, was more than 100%, or more than 10% rather, compared to the July 2022 production of 1.083 million barrels per day. Nigeria has for months now struggled to meet OPEC crude oil production targets due to the menace of rising oil theft, which has so far appeared to have defied all solutions. But we stay with that sector as increased oil sales have pushed Nigeria's foreign trade by 47.07% year-on-year to 25.84 trillion naira in the first half of 2022. That was revealed, of course, by the Foreign Trade Reports from the Nigerian Bureau of Statistics, MBS. The MBS in its report disclosed that in the first half of 2021, total foreign trade was at 17.57 trillion naira, with crude export at 6.12 trillion naira, while total import for the first half of 2021 was at 9.57 trillion naira and export was at 8.01 trillion naira, with a trade deficit of 1.56 trillion naira. In the first half of 2022, foreign trade totaled 25.84 trillion naira, with crude export at 11.53 trillion naira, while total imports for the period was put at 11.34 trillion naira. The exports at 14.51 trillion naira, and the trade surplus was at 3.17 trillion naira. The report also shows that the top 5 nations, the nation exported to Cote d'Ivoire, Congo, Ghana, Cameroon, and Turkey, while countries like India, Spain, the Netherlands, and the United States of America top the list of export destinations for the quarter of 2022. Away from the oil and gas sector, the rail transport and pipelines industry, which is a subsector under the transportation and storage sector, has recorded a 5.01% decline in the sector's contribution to Nigeria's gross domestic product. According to the Q2 2022 GDP data from the National Bureau of Statistics, the nominal GDP output of the sector crashed from 87.06 million naira in the first quarter of 2022 to 42.65 million naira by the second quarter of the year. This decline occurred as the subsector continues to struggle with insecurity and vandalism, just as the Nigeria Railway Corporation suspended the Lagos-Kano-Ajaokuta train services due to fear of attacks by terrorists. There you go. That's some of the stories making headlines at this time. Let's get into our first conversation now. Cryptocurrency adoption is rapidly on the rise here in Nigeria, despite regulators' attempts to limit access as users seek alternative methods of making transactions. According to reports from the Global Crypto Adoption Index published by China Analysis, Nigeria ranked 6th in the world of crypto trading, as a lack of financial inclusion and macroeconomic factors are also pushing Nigerians to trade cryptocurrencies. This is despite the country's central bank saying in February 2021 that the use of cryptocurrencies is a direct contravention of existing laws and banning commercial banks from dealing in them, warning that cryptocurrency trading poses risk, including investment laws, money laundering, and terrorism financing. With this ban in place, the question begging for answer on the lips of many Nigerians is what exactly is fueling the rise of crypto trading in Nigeria? And to provide answers to this question and many others, I'm now being joined virtually from Warri in Delta State by a blockchain architect, Dominic Rume, who joins us live on the program. Dominic, thank you so much for agreeing to speak with us here on Business Nigeria at this time. Perhaps you may need to talk to us from your perspective about the engagement of Nigerians and cryptocurrency at this time. What are you seeing? What are you reading?
Well, thank you very much for having me. I'm grateful to be here on this particular platform.
Yeah.
The truth is, the Nigerian government is actually missing something that is a blessing, right? So a few weeks ago, Nigerian government were invited to El Salvador as part of some of the countries that are looking at getting digital economy, digital currencies, and Bitcoin into their economy. So the Nigerian government actually is blessed to have citizens that are interested in cryptocurrencies, in blockchain, and all these particular new technology, instead of a country now that is like El Salvador, that it is the country that is first interested in that particular type of technology before the citizens. You don't know the amount of blessing that this is. When you talk about the cryptocurrency, the CBN ban, in 2017, when this particular issue started, a circular was sent out that they should stop payments for businesses that have cryptocurrencies, that are using cryptocurrencies as means of transaction, that the bank should stop issuing out electronic payments to them. And then move down to 2021, there was another reminder that came at around February and reiterated that particular circular that happened before, which you see Nigeria is ranking in the world as one of the top leaders in terms of cryptocurrency, at least sixth or at least fifth in the world in terms of cryptocurrency. Then you now see in 2022 now, this present time, with this particular knowledge, with these particular statistics that have been given, and the global body recognizing Nigeria as part of the global movers, the SEC sent out a particular circular. That circular stated that Nigerians can now actually get into this particular cryptocurrency space and play it on a regulated level, which was one of the very good things that happened. Because you see, every investor, some people are scared of cryptocurrency. Every investor wants to be sure of his or her investment. And regulation is the best way to be able to ensure that cryptocurrency actually gives you the best form of the best form of value that you want it to deliver to you. And how do I mean? To be able to play in a space that you can hold somebody accountable. That is what the SEC did. But the problem with what the SEC did is that they made the bottleneck or the entry window to be very high. I mean, okay, so we have young Nigerians, the majority of Nigerians that are playing in the cryptocurrency space, a lot of them are within 20, about 15 years to about 35 years old or 30 years old. A lot of them do not have the kind of capital that was actually set out for what? For cryptocurrencies to be to be regulated. And what kind of capital are we talking about? We had 100,000 registration fee, we had 300,000 application fee, and we had 30 million I think 30 million filing fee. I needed to have 500 million as as collateral, as bond. You can see, because of the recession and the pandemic that happened, we have, as a country, we used to be we have actually stood out as the giant of Africa. Every time we have stood out as the giant of Africa. And since the pandemic and the recession that came, we're expecting that a lot of things will happen. But you can see that Nigerians, as the giant of Africa, has taken a lead role in this particular cryptocurrency and technological and digital space, and we're leading this particular charge. And that is something that the government is to recognize.
But I would like to ask you, Dominic, because, I mean, it's obvious we ranked sixth in the world of crypto trading. I would engage you very briefly about why perhaps we're having many Nigerians involved in this, perhaps. But those who are involved in crypto, for instance, are we not supposed to be concerned about the risk of engaging in such tradings? Because the concerns of the government, for instance, the fact that there could be investment losses, there could be, it could be as a medium of financing terrorism, and of course there are also issues around money laundering as well. Are we not supposed to be concerned about some of these risks involved? Because I'm not sure Nigerians have recovered from issues around the Ponzi schemes. I'm not going to mention any one of them, but a lot of Nigerians fell victims to very recently issues around Ponzi schemes and lost a lot of monies and investments.
Yes, you are very correct. There is the fear, there's a general fear from the government, right, that these particular cryptocurrencies and a couple of things cannot be checked. Let's say, for example, globally, we had cryptocurrencies. Cryptocurrencies was used during the Ukraine war to be able to see. It depends on the purpose, actually, and that is the truth. You see, the intent that someone has towards using a technology like the internet, this particular technology now we're using it for good. Some other people, they use it for what? For bad. So let's say, for example, like the war in Ukraine, you can see good relief materials came in terms of what? Cryptocurrency funding, and what? It was, even though the government possibly took some tax from maybe inside or whatever it is, but at least it was beneficial to what? To the government. And that came as a source of what? A new digital type of crowdfunding that is now available in the world. Let's take, for example, to something that happened in 2020. That is when they used Bitcoin to fund the NSAS movement. A couple of people were able to use that, and the government had a couple of concerns about it. And yes, those kind of things are concerns that governments usually have. The thing is this: the government can actually use regulatory policies, just like we said with the SEC, to be able to protect the lives, the funds, and because if you lose your fund, there's high possibility that it can cut short your life, especially if you lose all your life savings there. And the government can put in, so that's why the Security and Exchange Commission came up with that particular circular. But it's just unfortunate that the bottleneck for it is very high. I mean, a lot of the Nigerians that are doing this particular cryptocurrency or that are in this particular space, right, they do not have that particular amount for what? For capital to put into it, to come out boldly and say, well, we want to be able to float this particular token. Although the SEC did state some warnings. Like, I was going through the document earlier in one of the interviews I had, and I was telling them that the SEC placed a particular warning that even after you have paid all this money, you should be able to still state that before the approval that the XCC is not available, is not associated with this and all that, putting a disclaimer to the investor that such an investment is what is possibly going to be affected by volatility or something in the market. Although there are regulatory this thing coming out, we can see that this particular regulatory this thing is still a little bit porous because there is still a disclaimer of this is almost not a financial advice. And what you can go and do it on your own. So the both step that they took to actually put up some regulatory policies is one key factor that will protect a lot of Nigerians from what? From the hazard that is associated with it. Like for a middle class Nigerian, in the document, it is said that you should not invest more than 200,000 naira, and less than maybe from about 200,000 naira to about maximum of 12 million naira per annum. And you can see because of those kind of benchmark, you might not lose all your life savings, and then you want to be able to manage them.
Yes. So, well, since we have been trading, perhaps we have been trading illegally because the government of the day in February 2021 had banned crypto trading. So you are trading illegally. Is that so?
How do you mean trading illegally?
Does that make it illegal is what I'm asking. If the federal government had in 2021, February, banned the use of cryptocurrencies.
Okay, so understand what was in the circular. The circular did not say that Nigerians should not use cryptocurrency or Nigerians cannot trade in cryptocurrency. It says that the bank that is processing transactions for Nigerians should not process cryptocurrency-related transactions for what? For Nigerians. So this is a very strong key point that a lot of people need to know.
The government had also said, Dominic, that it was a direct contravention of existing laws. That was also in the circular as well. Does that make it illegal?
When you say existing laws, would you be able to point a couple of them?
Okay, but maybe we should leave that argument. But let me also ask you about the impact on Nigeria's economy, for instance. Just how has this trading impacted on the growth of our economy at this time?
So the impact is actually very immense. For one, with cryptocurrencies, we've seen increased gaming activities. Like Nigerians have been able to earn from participation with just the blockchain as a technology. Nigerians have been able to earn from participating in global gaming platforms. They've started game development on the EVM, let's say like on Ethereum, on blockchain. You see things like the new NFT economy coming in, and people are able to engage in blockchain games, and they're able to earn digital rare collectible items, and they're able to sell it in the open marketplace for a lot of dollars. We've also been able to monetize the African work, the African art, the African spirit, in terms of the ability to create, the ability to put originality into everything that we do, especially as it is related with the blockchain. We have also used it to gain more financial freedom because we are gaining more FX. Like I can export my intellect. What we do at VREM, we teach people the skill set of the blockchain. So we educate people everything they need on game development, solidity, EVM, just think of it, NFT 2D design, NFT 3D design. And you see, once these people are able to work with foreign companies, they can be earning $10,000, $5,000, $1,000 on a monthly basis. And this brings FX back into the country, which means that we're exporting intellectual property and we're not just relying on cash crops, right? To be able to generate intellectual or generate FX for the economy. So this particular technology actually brings a lot of interesting benefits. One quick benefit is the fact that it allows you to create job opportunities for people. I mean, there's a shift from the degree-empowered economy to the economy of skill. And blockchain skill actually makes the difference. The thing is this, there's high demand for blockchain across all industries and sectors at the moment. And that particular high demand is creating a scarcity. Thus, blockchain engineers, blockchain people, they're in high demand. And then you look at it, you're able to create new businesses for people. If you can use new cutting-edge solutions, right, to be able to develop business use cases for traditional businesses and upskill those traditional businesses to the blockchain level. I mean, let's say, for example, before, if you were going to upload your pictures on maybe Instagram or maybe Facebook, on the block as a content creator, right? On the blockchain, one level higher, maybe as somebody as a photographer on the blockchain, one level higher, you upload it on OpenSea, as possibly one that maybe uses the bank normally for your transactions to be able to get, maybe you're a farmer here in Nigeria and you want to grow crops for people maybe in US, in Pakistan, in Kuwait, and they want to send you money. Maybe normally they use Western Union, they use all of those things. They have the bottleneck of 10% in transactions and all that, right? And they use banks normally to pay your money, and you get those money in 10 days, 15 days. You can upskill one step higher because the blockchain is just an enabler of everything. The blockchain is not competing with finance. The blockchain just enables finance to get better. So instead of you using that particular bottleneck where you don't even have the dollar, I mean, for us to use our card in this country is just $20 you can use on a monthly basis. So for you to be able to gain that particular access to global capital inflow, you can upskill one step higher towards the blockchain to be able to have access to US dollars. So they pay you those currencies maybe from outside country, you farm the produce here in Nigeria, and you export those produce. You have brought in FX into the country.
All right.
You are farmed using our natural resources, process it, and go out. So it has been a very, very strong learning curve. And you can see remittance and payment, just like I just made mention of. It is very, very profitable.
All right, so Dominic, we need to wind down on our conversation because time is seriously of essence at this point. But I want you to perhaps walk us through the impacts of the restrictions by FG on cryptocurrency transactions, and of course the ban on Twitter as well. Walk us through the impact of these restrictions and the ban on Twitter on our foreign direct investment.
Okay, so the thing is, like I was in Abuja a few weeks back, and you have people that want to possibly come and they put in blockchain centers here, innovation hubs. Like we're building, we just secured the land for one of the innovation hubs that we're building here in Delta State, right? Now, this particular set of people that came in from Dubai, seeing that type of ban on cryptocurrency secular, and they want to come and build a blockchain center here, where they can teach people, these people can master this skill set, and we can optimize these people to another economy.
I'm just asking
those people will be scared to invest their billions of dollars into our economy, and that is already affecting foreign direct investment. Like I said, Nigeria is blessed. The government is blessed to have citizens and population that is, first of all, interested in the blockchain technology. It's not the government that is interested in it, though. It is the citizens that have the skill set that is interested in it. So instead of the problem is that the government does not come from a knowledge standpoint.
I understand.
To attack this. They can come from there.
All right,
they can come from there, then
we have to go now, Dominic. I understand we are absolutely pressed for time, but perhaps very briefly, walk us through the future of cryptocurrency transactions here in Nigeria. We are a few months away from a general elections in February 2023. What's the future of cryptocurrency transactions?
Okay, so I will say two things because you made mention of the election. Number one, with cryptocurrency or with blockchain, we have like the INERA. These things currently, like what the government released a few months back, the INERA will be able to help to scale our economy, help better taxation, help reduce the amount we are using to be able to print the physical Naira notes that we're distributing, and help have a bit of control around the economy. So that is actually a good step in the right direction. But then, mind you, it is still CBDC, which is a central bank digital currency, which is not really compliant with the blockchain, although it is in that direction. Number two, because you made mention of the election, right? You can have things like I said in one of my speeches, like you can have things like the blockchain. One property of the blockchain is immutability and transparency. You can have an election where you have a population of 100 million Nigerians, 50 million accredited votes. We say, okay, let the election start by 6 a.m. in the morning. Every accredited voter, they've gotten their token. And then they put, like computer-based tests, they put that particular token straight into a vote. Everybody start voting. And in less than a few minutes, you will see that particular election result, everybody can see transparency on the blockchain, which will be able to make sure that the blockchain as a technology helps to upskill our electoral process, and we'll have a free and fair election. At Verum, we have the tech side to be able to develop such particular processes. And you see that this technology is very robust. We can save the life of coppers, we can save a lot from just dying in terms of all of these type of things. The future of it is so bright.
Well, Dominic, we have to leave it here. I'm afraid there's so much to unpack, and of course, you're doing so much justice to this, but we have to go now. Great job to you and, of course, every other young Nigerian who is into crypto, even though there are restrictions, of course. We hope that the new government perhaps would allow crypto even excel more, and then Nigeria can, of course, move from the 6th position to being number 1 in crypto transactions. But thank you most kindly, Dominic. You have a book, The Wealth of the Blockchain and Evolution into the Metaverse. We cannot talk about your book. Maybe subsequently we could speak with you, but thank you indeed for your time and your insights. Blockchain architect and a certified metaverse expert, Dominic Rume Oriria. Thank you indeed for your insights and time.
Thank you very much. I'm grateful. You can check rumedominic.com to find the books.
Dominic, you may have to pay for that. Thank you so much. We'll see you some other time. This is Business Nigeria. Coming up on the next side of the show, of course, we'll be analyzing the performance of the Nigerian capital markets amid global economic issues. Joining me live to discuss more on this is an investment banker and stockbroker, Muktar Mohammed. He joins us live in the program, but that's in a moment. Stay with us. Thank you for joining us again. This is Business Nigeria. Let's get into our second conversation now. Amid the backdrop of the global macroeconomic instability and the proliferation of illicit activities in the market, the Nigerian capital market successfully pulled through, with the stock market being ranked among the best performing in the first half of 2022, despite uncertainties in the Nigerian economy, such as political risks, inaccessibility of foreign exchange, challenging operating environment, and other global trends that have resulted in an unprecedented exit of foreign portfolio investment in the capital market. Domestic investors' trading activities in the market as of June 2022 recorded a transaction worth of 1.4 trillion naira, while international investor trading activities was pegged at 243.5 billion naira. Joining me live virtually as we take stock of the performance of the Nigerian capital market amid burning global economic issues is an investment banker and stockbroker, Mr. Muktar Mohammed. Mr. Muktar, thank you so much for agreeing to speak with us here on Business Nigeria at this time. Good to have you back in the country. Just before we turn to issues around the economies of the world and other global issues, the Queen of England, Queen Elizabeth II, has only just passed away yesterday. Talk to us from that window and perspective as to how all of this is going to play out. We do have a new king, King Charles III. How will that play out in the markets? How will that play out in the economies of the United Kingdom and economies all around the world?
Thank you. It's always good to be back. Well, if you go about the Queen, that is a great loss to the UK economy and to the global market, also because of the kind of stability she brings in. There's a saying that says the Queen does not explain herself, neither does she argue. So definitely, she has brought a lot of peace. She's been the stabilizer of the British economy, especially, and also in the Eurozone. She's played a very high, especially in the Commonwealth. So you could see the impact of that in terms of economic activities are on standstill in the United Kingdom at the moment. Even the greatest football league in the world, with the British predecessor, the Premier League, and all have been suspended for this week. And so we see that also playing out in the economic space, also in terms of the rates between the euro and other currencies, the pounds and other currency of the world. You see that the pounds is trading low. Now, the good thing about Queen Elizabeth was she was greatly admired by the people globally. She was somebody that even if people have some reservation about her policies or about the way the royal family especially respond or react to issues, she was more or less of like a global peace stabilizer. So, but when you look at the current king, King Charles III, you know he's shown with a lot of controversies. And like if you meet the average British man, he's saying that, look, this is just a stopgap measure for the real king and queen to come in at the appropriate time, which they think the people's king will be Prince William. So if you look at that by the economy, then you know that it will take a lot for King Charles to gain the popularity of the people because of a lot of issues that's happened before now.
Yes, and speaking about some of the changes that, of course, would take place, are already even taking place, is the fact that the currency would now have the face of the king. Long live the king, King Charles III. I wonder what that perhaps would do for the pounds as compared to other currencies around the world, the yen, the euros, the dollars, the US dollars, the Canadian dollars.
Yeah, as this morning, the pound is already trading at, it's trading at all-time low since 1985 to the euro, to the US dollar, and also to the euro, and also to the yen. So it's expected. And again, when you see that thing is going to come up with a lot of economic implication and cost in terms of reversing all of this currency. But it's not something that will be done at a go. So it will be phased out gradually. And so it's a long process that is going to affect them economically. And you mustn't forget that just yesterday, the new prime minister was also ruling out our economic policy as regard energy, and which said that US, most of the UK family will be paying £2,500 per year. The government will be doing that for them. I mean, the government will subsidize that, so they will have to pay just £2,500 and make sure each household have a savings of £1,000. So, and that, again, is a major driver, because, again, it's going to fuel inflation, which they are already governing the worst inflation in the history of the United Kingdom economy. So all these, with what is happening now, it's not really going to work in their favor in the short term. But again, when we see those policies, we begin to see what are the long-term implications of those policies, via how the people tend to receive the new king, especially in terms of policy, in terms of perception, and if it will be accepted globally, just like Queen Elizabeth was. Then if it does that, then we'll see the UK economy turn around. But it's going to be a very tough time for them, because they're already going through tough times in their economy. And the retail sector in the UK, which was tried to be the greatest mover in terms of job, in terms of even in their equity market, seems to be trading low at this moment, even since the beginning of this week, because of high energy costs and a lot of inflationary growth that has to do with high energy costs and also production costs. So there's a lot they need to do to change the tide.
While we stay with the Queen, her reign, her life, her legacy, just how much impact will that also make here in Nigeria and perhaps the continent? I want us to perhaps narrow our conversation down to Nigeria. I mean, she was the head of 14 governments, 36 Commonwealth nations of the world. She was revered here in Nigeria and the continent and all around the world. But speaking directly to us back home, how does that affect and impact us, her departure, her absence?
Well, the president said it, that the history of that President Muhammad Buhari said it through his press release, that the history of modern day Nigeria is not complete without the Queen. And so in terms of impact, I don't see in terms of economic impact, I don't see so much affecting us, because if you look at our trading between us and the British and the involvement of the Queen, it has not been that so involved. And remember that she is just a ceremonial head of state of all the Commonwealth nations. So in terms of that, I think in terms of going forward, when we talk about peace in the region, that is where we will see the impact of Queen Elizabeth, because even until his last moment in the throne, she turned to intervene in a lot of resolving a lot of crises within Africa, and also especially Nigeria, now that we are going through security challenges. Our wisdom, our sense of how to address issues would have been to our advantage. But when you look at economically, have we really done so much business with the UK? I don't think so.
Well, Muktar, we have to, well, perhaps discuss other issues that concerns us, but of course, this is a big loss. She will be missed at 96. She passed at 96. She was on the throne for 70 years. She only ascended the throne in 1952 when she was only 25 years old. We have to also get used to referring to the head of the monarchical leadership or hierarchy now as a king. We have always been used to the Queen, but we have to get used to King Charles III now. But let's bring the conversation back home and get to see how we can discuss issues around our stock exchange here in Nigeria, for instance. I mean, surprisingly, the Nigerian capital market pulled through, with the stock market being ranked among the best performing in the first half of 2022. Does this come to you as a surprise?
Yeah, definitely yes and no. Yes, in the fact that with the global economic crisis that we are experiencing all over the world, especially in terms of inflation, Nigeria also has the volatility of our exchange rate, We just, like you said in your introduction, we are not seeing the foreign investors coming in, either portfolio investors or foreign direct investors coming into our market. We've seen our Naira exchange to the dollar going to an all-time high. So a lot inflation is at an all-time high since 2009. And so it's when you look at that, but when you look at what are the price of our equities, when you look at the figures, most of our equities are selling at a premium, especially when you look at those in the banking sector with the type of expansion they've done in Africa and the type of profit and terms of dividend payout they pay. They seems to be one of the best dividend paying out companies in the world. So you won't be surprised at the market. And again, we'll see, like you said also in your report, it's been driven mostly by local investors, and local institutional investors are beginning to see value, especially when you look at other investment vehicles in Nigeria that are the returns are very low comparable to what you get in terms of dividend yield and capital appreciation in the capital market. You won't be too surprised. I think basically, and the numbers that have been coming in, even the half-year numbers that have come in thus far have been very, very impressive. So like I always say, the market always have a life of its own, sometimes different from the economy. But in the long run, the economy tends to play a larger part in determining the direction of the market. But in the short term, the market seems to take a life of its own when it begins to come out with those figures. But if we are not addressing those economic issues within the shortest possible time, then we'll begin to see those economic issues begin to affect the market. But for now, I think we are enjoying those rally because of the price of our equity. The PE ratios of some of our equity are the lowest in the world. So I'm not in that area. I'm not surprised. But when you look at global economic trend, then you're surprised why we are the leading stock market in the world.
Mr. Mohammed, can I also ask you perhaps to do a direct comparison between these two global issues, the COVID-19 pandemic and, of course, the invasion of Ukraine by Russia? President Vladimir Putin was, of course, led that attack. Which of these two events have had perhaps a more devastating impact on our capital markets?
I think the invasion has had more devastating effects on our capital market. Remember that the COVID-19 pandemic was a global issue, and Nigerian government were able to tackle that. It was an issue that has to do with all economy all over the world was shut at that time. And also we were able to handle in terms of handle our health challenges within lost a lot of life. Those period we were able to, the government came up with proactive ways. And again, when the vaccine came, we were very receptive to taking the vaccine, even if it's not commensurate with our population. But when you look at the current crisis that the invasion of Ukraine has done, it has wiped out all the gains that we have gained post-COVID. And so what we are seeing now is high energy costs, especially to Nigeria, that has affected our foreign reserve, because the cost of refined petroleum product, because we are still refining about 90% of our, in short, almost 100% if you go by what the NNPC Group Managing Director said, that most of our refineries have not even been able to do even 1% refined petroleum product. So, and that means that thus far the NNPC, which is the cash cow of the Nigerian economy, have not been able to remit anything to the Federation account. So when you look at that, again, you look at inflation. And again, with this inflation came, we have three types of inflation attacking us at the same time: production inflation, market demand inflation, and also economic demand inflation, all coming into play in our market at this time. These are all attributed to the Russia invasion of Ukraine. The cost of wheat also have gone up. That has also increased the cost of bread in Nigeria, which happens to be one of the easiest food item of the ordinary Nigeria. So when you look at that, via the COVID pandemic, you seem to say that the Ukraine crisis has affected us more. And in terms of the equity market, unfortunately, we're supposed to be seeing gain in the capital market, especially when the oil and gas sector. But the only gain we've seen in those sectors in Cyplat alone that we're able to, because they are They are the only company that is fully listed, or I mean, fully both their production, they are listed, and their marketing arm also listed. For other oil companies, they just their marketing arm, their downstream that is listed in the equity market. And so what you see about that, you know that we have the challenge of subsidy coming in. Most of them have not been importing petroleum products. So we are not seeing those gains, exception or setback. And Owando, that is wholly listed, also have its own internal crisis. If you look at that compared to a company, a wholly listed company like the Saudi energy company, which generated its highest gain ever. So, and or even if you look at the global market, also the US market, the UK market, the European market, you realize that the energy and gas sector seems to drive the market. But in our own case, it's different, and because of the high cost of not the high cost of energy, the subsidy payment from the government. So it has not impacted in the in the bottom line of these companies. And so other companies like the consumer sectors and other sectors are also gobbling with inflation. The banking sectors are also gobbling with rate hike and also gobbling with non-performing loans that are increasing because of the slow nature of the economy. So if you look at that, you realize that the crisis in Ukraine has hit Nigeria more than the COVID-19 pandemic.
And I remember that during COVID, there were talks about dollar scarcity. There were also talks about foreign players exiting our markets. But can I also ask you, can our stock markets find financial strength with only players from domestic, from here, from domestic investors? Can we find financial strength and capacity with investments only from domestic players?
Evidently, we are not finding that. That's why you don't see the kind of bullish runs that we normally experience when we, in the market, if we have the foreign investors in there, because most of the investors that we have now are short-term investors, especially those indigenous investors. Most of them used to be the investors that play this, the treasury bill space, the fixed income space, the bond space. So most of them, and those are done for 90 days, when we 180 days. The highest you get is 364 days. So what we are seeing now, we are seeing short-term players. So what we see in the market, you see the bullish run for a week or a month, and then after that you see it retard, because most of them take in profits and also look for a good entry point. Some of them will take in the profit and even enter into the fixed income space for the next 90 days. Then looking at the returns they get, there comes into the market. So we have short-term players, and like I always say, the stock market is not a sprint; it's a marathon. And so when you don't have a lot of people running the marathon, then you see a lot of liquidity challenges in the market, and also that is why the result that comes in are not always very impactful. You look at an equity like Zenith Bank, despite the good results, we are not seeing the impact in terms of price. We also look at UBE also came out with their result yesterday. We are not seeing those impact because all we have are short-term players. So generally, it has not really helped the equity market in terms of those bullish runs that we used to see when we have foreign investors coming to the market.
Yeah. And perhaps maybe as we begin to wind down on our conversation with you, Mr. Mohammed, perhaps you may need to do an analysis of trading activities for this week. It's the close of the week, Friday. I wonder what stands out for you in the market this week.
I think what stands out for me in the market this week is the results that we have seen, especially from the banking sector, and Fidelity Bank for the first time paying an interim dividend of 10 kobo and selling at 3 naira 50 kobo at the time. 3 naira 30 kobo at the time that result was released. It has moved to 3 naira 64 kobo. For me, that was the standout in terms of saying that, and also the news that he's also acquiring the Union Bank foreign subsidiary in the UK also. That's one news that stands out for me. And also, like I said, the result that came out from UBA also seems to stand out. But for me, I think one standout event of the week was the result from Fidelity Bank in terms of the payment of interim dividend. And that means that bank is itching towards becoming a tier 1 bank with the type of profit, with the type of market segment that they are gaining, especially in the retail space, especially also in the Southeast. They seems to be the king of that area. So for me, that one thing that market news that really stand out through the week.
And we are closing at the positive region or zone at 0.09%. I wonder what your expectations are and projections, of course, for the new week.
The new, I tend to say we'll still see some of the position, especially we're still expecting results from Access Corporation, the holding company of Access Bank. We're expecting result. It's the first time the half year is as an holding company. So we want to see how that result will be, and also we'll also see other results from other tier 2 banks also bringing out their result. And also we mustn't forget that, and we also have to see half-year result from some of these conglomerate also. And so for me, I think next week is going to be a week that the result is going to tell the direction of the market in the short term, because when those results come in, Nigerian investors, what they do is that when you start having those positive results, they begin to look towards the year end. We are already drafting into the third quarter already. And so by December, we are all in the year end. So they begin to look at that view of how much in terms of capital appreciation and dividend yield they will get from the market if they enter the market when those results are out or after the markdown. So for me, next week is going to be key because a lot of equities will be marked down. We'll see Zenith Bank was marked down just on Tuesday, and they will be paying their dividend payment on Tuesday. And that might inject a little bit liquidity into the market because most investors might be bringing in some of the dividend back into the market. And we will see dividend payout also from UBA also. UBA will be closing, will also be marking down next week also. Guaranteed Trust Bank and holding company also GITCO will also be marked down for dividend payment. And so for me, what will stand out next week is the marking down and look at the price and what investors may see a bargain hunting in most of this equity after they are marked down, after their declaration of interim dividends.
Well, you sound optimistic, and of course, we always need to sound that way, sound positive about the market, and we hope that indeed the trading activities will be in the positive region next week. Well, thank you so much indeed for your valuable insights, Mr. Muktar Mohammed, investment banker and stockbroker. Thank you indeed for your time on the program.
Always a pleasure. Thank you. God bless.
All right. So there you go. Well, this is Business in Nigeria. We have to leave you now, but we cannot do that without bringing you up to speed with developments and updates from around the world. And we begin in Asia, where shares rose today, buoyed by a pullback in the dollar and hopes for a stimulus from Beijing, while markets digested hawkish comments from the U.S. Federal Reserve and Chief of the European Central Bank on the rate hike path ahead. MSCI's broadest index of Asia-Pacific shares outside Japan rose at 1.4%, driven by a 2.5% jump in Hong Kong's Hang Seng Index and a 1.2% advance in China's blue chips, as the Asian index headed for a small dip of 0.2% for the week, while Japan's Nikkei gained 0.6%. And cautious optimism is set to continue in the European markets, with the region-wide Euro Stoxx 50 futures up to 0.3%, German DAX futures rising at 0.2%, and FTSE futures at 0.4% higher. Wall Street's main index posted modest gains after heavy selling earlier in the week. S&P 500 futures rose at 0.5%, and Nasdaq futures were up at 0.7%. And of course, in a sign of improved risk appetite as markets stabilized. Meanwhile, Bitcoin surged past the $20,000 barrier and was eyeing its best day in 6 weeks today, as the US dollar fell broadly and markets found reasons to be cheerful at the end of a dull week. Now, Bitcoin, the biggest cryptocurrency by market value, rose more than 7% of $20,796, a 2-week high. Either the second highest rose 5% to also hit a 2-week peak at $1,717. Bitcoin had been as low as $18,540 on Wednesday. Market participants say there was no particular trigger for the gains beyond a broad upbeat mood in evidence across asset classes today, led by a drop in the safe haven dollar and a rally in Chinese stocks. Now, if the cryptocurrencies can hold their gains until Sunday's close, Bitcoin could log a second weekly rise in a row and its best week in about 1 month. In Europe, France and Germany have pledged to act together to protect households and companies from soaring energy prices while also using fiscal policy to fight record high inflation. French finance minister and his German counterpart made a show of unity at the start of talks for Eurozone finance ministers in Prague, telling reporters they will cooperate on policies. The pledge is coming a day after the European Central Bank raised its key interest rate by an unprecedented 75 basis points and promised further hikes, prioritizing the fight against inflation even as the bloc is likely heading towards a winter recession and gas rationing. France, Germany, and other countries have announced multi-billion euro packages to help business and consumers cope with soaring inflation, as the Bruegel think tank estimates that the EU government support has already reached 282 billion euros, with more on the way. Let's wrap things off now as oil prices on the international market rose today, supported by real and threatened cuts to supply, although crude was set for a second weekly decline as aggressive interest rate hikes and China's COVID-19 curbs weighed on the demand outlook. Russian President Mr. Vladimir Putin has threatened to halt oil and gas exports to Europe if price caps are imposed, and a small cut to OPEC Plus oil outputs plans announced this week also supported prices. U.S. West Texas Intermediate crude now sells at $84.97 per barrel, with an uptick price of 1.71%. Brent crude records a 1.84% surge in price, selling at $90.79 per barrel. Bonnie Light sells at $90.67 per barrel, with a price drop of 0.68%. And for the OPEC basket, offers the price at $95.96 per barrel, with a price decline of 3.89%.